Hey everybody, you're joining me on a day of reserve with the airline. No military flying today. I'm literally on call with my airline as we speak. As you can see, I got the phone right here and they haven't called me yet. So I was able to do some catch up with all the real estate stuff, doing some emails and obviously making some videos. 3 days ago, I closed on 5 single family properties on 58th Street in Milwaukee, literally all in a row together on a dead end street, a deal that I really liked. But the reason that it's important to talk about this one is because I got a $50,000 seller credit. What does that mean? How does that apply to me? How is it better than just getting it for a cheaper price? These are all things I'll answer when we transition over to my computer to show you the Excel spreadsheet that determined whether or not I wanted to buy the deal, and following with the closing statement itself, showing every line item, what I paid, what the seller made off of me in the end. Hint, it's over $300,000 that they made off of me. It's a seller that I've dealt with quite a bit, but it's a really interesting deal to show you that because, people talk about 20% down for pretty much everything, if not more. 25% down is common too. And that's not untrue. I did have to put 20% down, but I ended up paying a little extra for the properties and took it back in return as a seller credit, which was applied to my closing costs. And I was able to get these properties for less than 20% down. I brought $55,000 to close on these properties. Again, not an earth-shattering deal. This isn't one deal that's going to make or break my entire life, but it's a step in the right direction. And it's an interesting case study for all of you who are trying to get into real estate and might not have the money right away to buy it. It's expensive. 20% down adds up extremely quickly. Trust me, I know. And it makes it really challenging to buy new deals. And expanding and getting more units really is a key, in my opinion, to help offset costs and obviously increase income on that side of the balance sheet. This is an example of how you can get your foot in the door with a little bit less down than you otherwise would need, and you can apply the same concept to a smaller deal. It could be on a $100,000 deal, or maybe if you can find a $50,000 deal, the same concept applies. So take it with a grain of salt that it's 5 properties. You could do the same exact thing with 1. You just have to have a seller that's willing to work with you, and this seller has been extremely easy to work with, and I've been trying to be easy to work with them. So it's led to years and years of me buying stuff from them as they continue to expand in Milwaukee. So with that being said, I hope you enjoyed the video. I hope it is at least a little bit informative and helps you determine what you're going to do with your next move in real estate. And like I said, I'm just happy to be on call right now and have not gotten a phone call from the airline. So all is well. I appreciate all of you watching the videos. I appreciate the comments and even the people asking for consulting calls. That was insane. I didn't expect that to happen this early on. I've just been making videos and see if anyone finds them interesting. I'll have some more to talk about that in the future, but that was something that was not expected, and I'm extremely thankful for. So between everybody that's watching the videos and Kevin doing all the editing, and it's intensive because I say a lot of silly things, it really means the world to me. So I appreciate all you guys, and I'll talk to you soon. All right, everybody, welcome to my computer. This is the deal that we just closed. 5 single families on 58th Street in Milwaukee, 5 units, $1,539 is the average rent. So it brings in $7,695 a month. Multiply that by 12 months, we're getting our gross return, or our gross income rather, of $92,000. We're going to put a vacancy rate of 5%, which is about average. You could go 10%. Some people put even higher, but it's all make-believe numbers at the end of the day. So I put 5%. At least there's some sort of buffer there. It's about what it would cost to renovate one of the units. So that checks out for me. Plus, people aren't going to pay rent. There's all sorts of things that will happen. Property taxes are $8,500. Management fees, that's 8% of the gross rent. Sometimes I go a little more aggressive just to make sure my numbers are covered. $7,400 advertising, maintenance and repair, building supplies, and these are just guesses. It tells you if you hover here, 50 per unit, but this was made years and years ago. So is that really accurate? Maybe, maybe not. But I try to put in what I think would be accurate. For example, legal and accounting, $350. I put that in there because that's about what it cost me to evict one person. So assuming that we have one eviction out of these, that's potentially what's going to cost me. Water and sanitation is a fat 0 because on single family houses, the tenant pays for the water bill. Trash collection 0, electric and gas again paid by the tenant, so that's a 0. Credit checks and collection fee, we don't really have that, but again, it's just more of a buffer. Insurance, I'm averaging $1,000 a house when I made this, and so that's $5,000. It's about accurate. Pest control for, you'll see roaches, you'll see mice, you'll see a little bit of everything. It depends on how the people are living inside that unit. Lawn and snow removal, again, shouldn't be much because they're doing it themselves, but I put a buffer in. Replacement reserve and painting and decorating. Those two together would maybe cover one house if somebody moved out. To reset it, I should say. Total expenses are 30%. So that's about a 10% margin compared to my normal duplexes or multifamily, because we're not paying the water bill. Insurance is on average generally cheaper, and we're bringing in pretty healthy income for the unit count. Now when you go down to this point, this is the net income. So this is this number 87.7 minus the expenses of 26.2, giving us the net of 61.4. Okay, so that's not what I'm bringing home. I still got to pay the bank, and that's what this is right here. I've got a great rate with Summit right now, 5.75. I will never complain about that. They also let me buy down my existing rates to 5.75 for just $500 a loan, and some of these loans are over $1 million. So that was an easy yes for me. Now you'll see here 480 is what my loan balance is. It normally would have been a little bit lower, but like I said, I paid $600 and asked for $50,000 in a credit. So I'm carrying a little bit higher balance on all this at 5.75, and technically we settled on 25 years, but 30 years is in here. That gives us 2801, and it gives us, if you look at this, it's not quite a $30,000 spread. It's about 27 and some change, 28, let's call it. So 28,000 a year is what this should emphasis on should. This is what this should net after expenses, after paying the debt, property taxes, insurance, all those things. That's what you should be taking home. So that's the difference. That creates a debt service coverage ratio. DSCR, you may have heard that term before. It just means how much money is left over after you pay for your loan. And it gives me a 1.83. And the way that you determine that is really just dividing the net income by the principal and interest payments over 12 months. So that's what I saw. When I saw this, I said 1.83. It's pretty solid. These are solid single family houses. One of them is like a duplex converted to a single family, and I liked them. So I bought them. And that brings us to the next portion. This is the closing statement. So this is exactly what I get every single time. You guys have seen different versions with me because I close at different places. Land title is the best, in my opinion, in terms of just ease of use for me. They might not be the fastest, they might not be the cheapest, but they have never treated me wrong. They've never failed me on a transaction. So I will go back to them time and time again. Starting at the top, all the admin details. The buyer, that's me, of course. The seller, we blocked out all this information because they didn't ask to be in a YouTube video. The tenants didn't ask for their addresses to be exposed, and you know, my LLC is whatever. I don't really care that much. I'm not really sure what the implications would be if you figured it out, but it wouldn't take much because I've forgotten to redact stuff before. So anyways, real estate closing statement. Purchase price $600,000 is what I paid. The credit to the buyer, this is stuff that I got. I got city tax prorations from the first of this year to the day that we closed, and based on last year's taxes. So it's just a percentage. This was the gross taxes for last year. They divided that out, and that's what I got. Water and sewer charges for all these properties, I got credits for those. Ice and snow removal fee, sure, whatever. And the rents. So since I closed on the 17th, I didn't get paid rents for these properties, obviously. So they're prorating me based on the rent roll, the rents for the remainder of the month. So that's $3,300 I got. Security deposits of $12,493. Again, not free money, money that I'll have to give back to these people when they move out, but it helps in the immediate when you're closing on these properties. When people say 20% down, you think you need a lot more than you might actually need. And in this case, I needed even less because, as you can see right here, seller credit closing costs $50,000. So I got $69,000 worth of credits, which brought me from $600 down to $530. And like I said, my loan balance was $480,000. So you can see the delta there, and you can basically figure out what I had to bring to close. We got some recording fees, of course, that's always going to happen. And this is what's due. Now for the seller side, you can see they had to pay off a loan on one of the properties. They had to pay off another loan on a different property. They were only carrying a very small balance. They've had these for a long time. They paid very little for them. They paid themselves a commission of $1,000. A bunch of the land closing fees, you can kind of see them here. You have to remember this is for 5 properties, so they're a little bit bigger than you would normally see. Third loan, fourth loan, fifth loan. So they had loans on all these properties, but it really didn't add up to a whole lot. They paid out work to themselves through the LLC, tax balance to the city of Milwaukee, so they hadn't paid their taxes yet, which isn't abnormal. I do that from time to time. I'm actually doing that right now. Sometimes you have to do it for cash flow constraints or trying to keep a reserve. The city of Milwaukee is not going to take your property from you for a while, so you got a little bit of time to pay, but you are going to pay interest if you don't pay it right away. Water and sewer balance, so they had some water bills due. Starker fee, so that's their fee for doing a 1031 tax deferred exchange, just like you saw I did. And the funds that they netted $323,000. So of what I paid them, they got $323 out of it. and they're going to take that and they're going to deploy that into a new deal, likely for probably, you know, in the range of a 1.5 million. 200,000 will get you about $1 million. 300,000 will get you about 1.5. So, you know, they'll be probably in that range, if not combining it with other funds that they already have. I work with them a lot. They're the guys that got me into real estate to begin with. So who knows what they've got sitting in their 1031. Well, I might kind of know, but you know, like they have a lot of money transitioning around, and they've got a lot of deals they're working and rehabs and all this stuff. So that's what they got though, 323. If they would have taken a check, they would have taken a check for 320 grand that day, which is an incredible amount of money. All of you know I have a job. I mentioned it earlier in the video, and you likely, a lot of you have jobs. Imagining making 323 grand in one day, it's hard to wrap your mind around. And there's a lot of people on YouTube that are going to sell you that dream. I'm showing it to you for real. This is a real statement that's literally from just days ago. So 3 days ago, this is what I got. And long story short, I had to bring about $55,000 to close on this property. 55 grand isn't not no money. It's not no money. It's a lot of money still, right? But compared to what it would normally be for this size of a loan, it was significantly less because I had this massive credit. So if the property's numbers work well enough, you can take a credit and potentially maybe you offer a little bit more than you were going to originally, and instead you take a credit to help you at closing. It gets you into properties with less money out of your pocket. You guys have seen me do it time and time again. Is it going to get me in trouble one day? That's a great question. It's possible. If there's a downturn, I have a lot more risk at 480 than I would have otherwise, but the difference is not that big, right? And the immediate difference for me is huge because my cash flow constraints are month to month. I mean, I'm still working a job. I'm still doing a lot of things to try to make sure that we can keep the wheels rolling, right? And if I would rather take a larger loan balance and take a little bit more risk on the loan side because I think we have a good operation going, and reduce my down payment. And that's just me. And there's people out there that would say this is stupid. Why would you do that? But you have to do what fits you. And for me, this is what fits me. I'm going to keep rolling with it. And this isn't something I do every time. This is the largest credit I think I've taken on a property like this, but it certainly helps. And it makes it a lot easier and a lot less painful in the short term. So if there's one thing I would leave with you, it's that it's an option. It doesn't mean that it's always the right fit. It doesn't mean that you should do it. It's just something that you can do. And keep it in mind. If you can get the seller to agree to 500 grand and you're like, you know what, maybe I'll give them 550 and take the rest in a credit. It's a creative way to try to reduce your immediate down payment risk. Not all lenders are going to like it. Not all lenders are going to let you do it. I have a good relationship with my lenders and I haven't failed them yet. So they allow me to do things that maybe other people can't do. So this is something just to keep in your toolbox. It might not be the right fit for you right now, but it might be something worth looking at in the future. As always, I really appreciate you guys watching these videos. Hopefully this was informative, and I will talk to you soon.